Thank you for the very, very generous and kind welcome to the General Manager, Evans. Thank you very much. And thank you for the MCs. The way you have welcomed us here is very, very touching. And good morning to everybody. I think this is a week we are all going to remember in different ways. But for us here, we shall remember it as our annual general meeting after our last one in Mombasa. And as we do this, let us reconnect with one another and encourage one another to be positive about life. Because we are addressing a season of life which is usually very challenging if you have not planned for it. So I welcome you to this particular AGM, and we shall address matters and the results for 2023 that have been audited and reviewed by professionals from all angles. So members, trustees, and industry stakeholders, because we have a supporting team from stakeholders and also industry experts among us. Good morning. We appreciate your attendance, both physical and virtual. On behalf of the KenGen Staff Retirement Benefit Scheme Board of Trustees, it is my honor to welcome you all to our 24th Annual General Meeting for the year ending 31st December 2023. My name, as introduced, is William Rahedi. Kindly allow me to acknowledge the presence of newly retired members who are joining this AGM for the very first time as senior citizen. Karibuni. If there's any among you here, please stand up and let us give you some love. Recently retired.
Long as it's what I want to be, I'm okay. I'm okay.
There.
Who are you to judge me like say you be only pass?
Thank you. You shall encourage those of us still in service that life just another season of your life. So feel very welcome. Unfortunately, the scheme has lost some active members. The MC referred to that, and pensioners during the year. Today, we also remember them and continue to pray for their families. We have already given them a moment of silence, but let us continue to remember them in our prayers and in our thoughts, because it's a comfort to those who are close to them to know that they are remembered. Now, I'll ask the Trust Secretary, Mr. Murioki, who I'm sure you're all very familiar with, to confirm if you have a quorum to commence this meeting in full. Trust Secretary.
Thank you, Chair. And I wish to confirm that currently we have 322 members attending physically, 859 members attending virtually, a total of 1,281 members currently attending the AGM. Chair, I wish to confirm that we have a quorum, we are well collated, the meeting can commence. Thank you.
Thank you, Josephat. A quorum hence being formed, I declare the meeting to be properly and duly convened. Today's AGM is hybrid, as attested to by the MCs, acknowledging those far and wide and those present here. We shall have a few ground rules so that we can all participate. For virtual attendees, we have a chat mode that will be running throughout this session. You are encouraged to raise any questions and comments on that platform. Our team from the Secretariat will be responding to the queries raised and will also be addressing some of those questions during the Q&A session towards the end of this session. For those present, we shall pass the microphone around for you to share your questions or comments. You can also channel your follow-up questions and comments through email AGM at KenGen SRBS.co.ke. To engage with you, we shall also be running polls during the session and encouraging you to participate once it's open. For those attending the AGM physically, printed poll questions have been issued to you together with the audited financial statements. Please fill out the same and then drop the questionnaires at the registered desk located at the entrance of the venue. For any assistance, kindly reach out to the ushers. At this point, one of our key players in this business, our sponsor CEO would like to send us a message, and he'll be joining us online. Let's give him a moment to link in.
Good morning, everyone.
Good morning.
I believe I can be heard from that end.
Loud and clear.
Thank you. To the Chair and Board of Trustees, CEO and Trust Secretary, the team KenGen, the team Jenga KenGen from all over the regions in Kenya, ladies and gentlemen, good morning.
Good morning.
I take the opportunity to welcome to 2023 annual general meeting of KenGen Staff Retirement Benefit Scheme, the DB scheme, and KenGen's Defined Contribution Scheme, the DC scheme, taking place in Olkaria, the home of geothermal in Africa. Interestingly, this is my inaugural KenGen Staff Retirement Benefit Scheme meeting, and I'm elated to join you. To our virtual participants, we appreciate you for taking time off your busy schedules to be with us today. Members, your participation is very important because the schemes receives and invests your monthly contributions throughout your employment life with KenGen. Thereafter, the scheme pays you benefits upon your exit or retirement. This is the reason why you should keenly follow and get actively involved in the activities of the schemes. You need to understand how your money is multiplying. Ladies and gentlemen, the Board of Trustees is midway through the implementation of the scheme's 10-year strategy. And thanks to its visionary leadership and prudent investments, I confirm today that both schemes are financially sustainable. Na tunasema chama iko imara. After obtaining a license to internally administer an income drawdown scheme last year, the Secretariat commenced education forums sensitizing members on income drawdown. As a result, 86% of all members who retired from the DC scheme in 2023 enrolled to the income drawdown, whose value closed the year at Kenya shillings 340 million. This, ladies and gentlemen, is a vote of confidence in our pension scheme. Let us give a clap to that. Members, we recently launched Jenga KenGen Inua Mapato 2024 corporate theme with a focus of generating additional revenues, encouraging staff collaboration, fostering internal cohesion, and driving strategic growth to ultimately create value for relentless efforts, dedication, commitment of our entire KenGen family from across the areas. Members, the Jenga KenGen Mapato slogan is not merely a slogan, but a steadfast commitment to excellence, growth, and sustainability. Remember, as we Jenga KenGen, we are also Jengaing our pension scheme. I therefore urge each one of you to play your part in achievement of our collective goal. KenGen and KenGen pension scheme are intertwined and joined at the hip like Siamese twins, where our business growth directly impacts the pension scheme. For example, through our robust business fundamentals in KenGen, KenGen has been able to meet its commitments and promise to employees by paying pension contributions to the schemes, amounting to Kenya shillings 22.4 million to the DB scheme and Kenya shillings 1.451 billion to the DC scheme, respectively. Further, in fulfillment of the payment plan towards deficit funding for the DB scheme, KenGen paid further Kenya shillings 984.6 million to the scheme. This facilitated benefits payment to 71 DB scheme members and 73 DC scheme members who exited employment. Members, our scheme is managed by Board of Trustees with a wealth of experience. At this juncture, I would like to congratulate the Board of Trustees for their leadership in ensuring that the scheme achieved positive returns on investments and won several awards, including the prestigious Financial Reporting Award in the pension category. To keep you informed, education forums were carried out across all our operation areas. Pre-retirement sessions were also done for members nearing retirement. These are necessary engagement forums which educate you on the scheme and prepare you for life after retirement. I urge all of you to take them seriously and be empowered. Esteemed members, as I conclude, kindly allow me to emphasize the need to nominate your beneficiaries. Please exercise this right and separate your beneficiaries from claimants. I guarantee you that this information is held with the utmost confidentiality. I would like also to take this opportunity to extend my congratulations and express my gratitude to the outgoing board members, Ms. Winnie Patet and Mr. Patrick Ememia, for their contributions to the scheme. Additionally, I warmly welcome the new board members and wish them success in their roles. God bless KenGen. God bless KenGen Pension Scheme, and God bless you all. Thank you.
Thank you, Mr. CEO. At this moment, I'll ask the board secretary to release his first poll.
Thank you, Chair. We'll start with the first poll and requesting members who are attending, especially online, to go through the poll, and I read as it is. Members' education is one of the channels through which the scheme communicates to you, our members. How well do you understand the topic that we cover in the member education? How well do you understand the topic we cover during member education? One, clearly understand and relate the topics covered in the member education. 2, I understand some of the topics covered. 3, I don't understand the topic covered. Number 4, I have never attended any member education. Chair, the members 30 seconds to participate. Just reading the question again. Members' education is one of the channels through which the scheme communicates to you as our members. How do you understand the topics covered during the member education? This is a single answer question, so you can only choose one. First answer, clearly understand and relate to the topics covered during the member education. I understand some of the topics covered. Don't understand the topic covered. I have never attended any member education. I'll ask the team to project the results. Project the results. Okay, thank you. The result as shown there, Chair. Most of our members clearly understand and relate with the topics covered. And that is that 7%. Another good portion of our members, 47%, understand some of the topic. Small percent of 2% don't understand the topic, and we still have a big number of members, that is 40 out of the members who have participated of 301 who have never attended member education. Chair, this is a confirmation that we require to do even more to ensure that our members are well aligned with what we take them through, but also a good confirmation that members have been attending the educations, and a big portion of our members somehow understand what they are taken through. Thank you.
Thank you, Trustee Secretary. So members, at this point, I'll introduce members of the Board of Trustees. the CEO and others that run this, so that poll question, you can actually refine it by talking to them and identifying with them and asking the questions that need to be asked. Members, I'm privileged to serve in the board with a team of very dedicated and professional trustees. When you talk of trustees, most of these trustees have been taken through a trustee induction that involved a training for at least 1 week that went supervised by the insurance regulator and also by RBA. So for them to qualify to sit as trustees, they have been totally vetted to qualify to do this. So they're able to respond to a lot of the questions that you may raise and matters relating to retirement. So do not hesitate to ask. They're very willing to participate and engage with you. So I will start with myself. My name is William Rahedi, as I said earlier. I'm a board member of KenGen and was sponsored to serve as a trustee by the sponsor, KenGen. Now, let me trust the rest of the trustees. Let me introduce them. One trustee is not here, Elizabeth Njenga. Many of you will know her. She's the GM that manages strategy. She had some engagements today that did not allow her to be here, but she sends her greetings and wishes you well in this meeting. And I'm sure in our next meeting or other engagements, you'll get to personally engage with her or meet her. Then the next introduction is Austin Ouko. Austin is a trustee sponsored by the sponsor to the board of trustees. He also serves on KenGen as the company secretary. You all should know him. If you don't know him, you're not taking advantage of what you have in KenGen. Thank you, Austin. The next is Jennifer Mbugua. Jennifer Mbugua, if you don't know her, you're not applying your HR needs effectively. Jennifer is also sponsored by KenGen to be on the board of trustees. She's a valuable member of this team. She's got feelings that allow us to understand the human challenge of retirement because of her professional skills. Jennifer, thank you. Then we have Rono Kibet. Now, when we think of the future, we are always thinking of what can we do better? Rono is sponsored by the sponsor also to be a seat on the board of trustees, and his work in KenGen relates much more to building resources that are going to keep KenGen growing. So he's a strategist, good investor, and evaluates new projects that are coming up in KenGen. Thank you, Rono. Then I have Teresa Karani. Now, Teresa, she's also a staff member of KenGen, and all the work we do generating would not happen if her engineering skills to transmit that energy to the Kenyan people and those who use it happen. She's an engineer in charge of our transmissions. Thank you, Teresa. Then I'm introducing the man you all should know, Ernest Nandume. He's now, Ernest is a resource for not only KenGen, but almost in the whole energy industry. And beyond that, he serves on many other positions that allow him to impact a lot of areas in Kenya. So if you have challenges beyond just the retirement scheme, your first man to touch base with would be Ernest, because he might open doors that you think are impossible to open. Ernest, thank you for serving with us. And then we have Muhammad Abdi. Now, this is the man who comes to the grassroots and understands what is actually happening among those serving members. And then he can link you up to his network of unions to make sure that the pressure is right for you to get results you need. Abdi serves with us, and he actually reminds us of what we need to write so that members appreciate their future is taken care of. Abdi, thank you for serving with us and making us straight when we need to be straight. And then we have both Ernest and Abdi are member-elected trustees of the board. The last member I'm introducing is Jennifer Duo. Jennifer has worked with you and you elected her recently. If you didn't know who you voted for, this is Jennifer. Now, Jennifer has served with KenGen for many years, and she comes to the Board of Trustees with a lot of resources that makes it possible for us to deal with a lot of challenges that we could not have faced without her presence. And she's come out of retirement, and I have had to go for some sessions with her on training sessions. And her response and her understanding of matters relating to retirement, because she's retired herself, makes it a very rich engagement that grounds the trustees in the reality of what retirement means. So thank you, Jennifer, for serving with us. Today, we also bid farewell to our retired trustee. You heard of Patrick Kimemia. Jennifer replaced Patrick Kimemia. Kimemia had served diligently for the years he was with us, both when he was in KenGen and also in the pension scheme. He was an elected trustee from the pensioners who retired. He retired in 2023 from the Board of Trustees. He served the organization with distinction and left an indelible impact on us, on our success. We extend our deepest gratitude for his dedicated service and wish him well in the future endeavors. Once again, let us appreciate him because he's not present. We hoped he would be, but he's not here. So let's just give him a round of applause. Because the work we do builds from those who have done it before. So Patrick contributed to making us be where we are right now. As we bid farewell to retired trustees, we warmly welcome new trustees who joined our board in August 2020. This is an exceptional individual bringing wealth of experience. I have talked of her. May I take this opportunity to introduce the trustee who joined the year? I think we are going to have a profile of her on the screen, but I'll read it now. Jennifer Oduor was appointed to the Board of Trustees in August of 2023 as a pensioners elected trustee. She holds a Master of Urban Management, Department of Architecture and Building Science, University of Nairobi, bachelor degree in Land Economics Department, Land Development and Design, University of Nairobi also, PDG, Human Resource Management. She has undergone the Senior Leadership Management Program at Strathmore Business School, corporate governance training with the Center of Corporate Governance, and several professional trainings and certifications, including land policy, ITC University in the Netherlands, geographical information management system from various institutions within and outside Kenya. She has an outstanding career spanning over 30 years in leadership, corporate governance, land and property administration, management, acquisitions, resettlement, action plans. She's a registered and licensed valuer, registered and licensed writer, and a full member of the Institute of Surveyors of Kenya. She is also a member of the Chartered Institute of Arbitrators and accredited mediator with the Strathmore Dispute Resolution Center. She's currently an independent consultant in land and property matters. Prior to this, she served in the energy sector and the Ministry of Lands. We also joined by the CEO. Let's applaud Jennifer. Look at that track record. If you had any doubts about my earlier statement about her contribution, there it is. It's certified. We're also joined by the CEO and Trust Secretary, Mr. Joseph Murioki. You all know Joseph, don't you? If you don't know, then your investment could be way tracked, but he's the man who sorts it out, who plans for us, who puts us in order and makes us discuss matters of substance. Thank you, Joseph. At this point, I'll also introduce service providers, because as you can see, we are quite a variety of backgrounds up front here. And many of us may not comprehend a lot of matters, so we have been regulated by the regulator to appoint people to help us manage these matters so that they don't fall out of hand. So the first introduction, you've heard of RBA, the Retirement Benefits Authority. We have a representative here, David Lentio, from the Supervision Department. David, I think you're here. If you could stand up, I think our people would like to see that we are telling them the whole truth. Then we have investment managers. We have Gen Afric asset managers. Is Duke here? Yes, Duke. Duke Ochako is here. They try and get us the best rates. Some of you may be having alternative investments, but I'm sure we can also recommend them if you have alternative investments that you can go through, because they have given us fairly safe returns in the investments they have suggested to us. Then we have Salam in asset managers, Mr. Dan Gafego Ice. Yes. He also helps us make good investment decisions and even helps check our investment policy and consistency in that regard. And in all these things, they may give the advice, but somebody has to hold the assets so that they're not scattered everywhere and you have to look for them. So then the custodian, I will ask Eva Mwangi. She comes from NCBA Bank. She's got a wealth of experience in managing assets. So if you think Joshua doesn't keep the assets in his safe, he actually gives them out to the bank, and that is Eva's bank that is taking care of them or wherever they keep them. And then the advice comes from the investment people who then agree on the investment combinations that will make the best returns possible. But in all this, we also have actuarials who look at our assets and give us a valuation. Because the nature of business is such that it runs for many years beyond just what we're getting weekly. So we have to have somebody to look at it and say, do we have assets to cover the future? And those are the actuarials. For our Samara consultants do that for us. And we have Linus Makoho here. He's been with us many times. Please acknowledge him. But of course, we also need to verify that these things are true. So we have auditors who come in and look at the records and the documentation and the way we made decisions. Was it consistent with the regulators' expectations, with our members' mandate, and what the trustees' undertakings? So we have an auditor from PricewaterhouseCoopers, Calvin Kailikia. He verifies these documents and books you have in front of you have gone through their hands. That's an international audit firm that looks at it with all seriousness. And also, the very nature of life is that sometimes you have challenges with the law. So we do have advocates, but in our case, we have advocates who give us major advice on death benefit administration. For representative from GM, Goma Advocates, Mr. Gad Ouma. Give away access to the wrong people or guide us according to what is correct. And we work in utmost good faith to do it that way. Allow me now to call upon the CEO and Trust Secretary to introduce to you his management team, a team that the board has full confidence in and assures you of their total dedication to serving you. Josephat?
Thank you, Chair. Request the team to start from wherever they are. So I know they're handling various assignments. So I'll introduce the team from the team that takes care of pension administration. We have Kirete Kamau, the head of the department. She's there, assisted by Albert Anao there, and Doreen Wairimu is at the back there. Then we have investments, that people that take care of your investment. Anna Gohe in absentia, also assisted by Evelyn Mwangi there. Thank you. In finance, the people ensure that the finance are in order. We have Nicodemus Kipto, the head of the department. Then we have Rashid Kanywa at the back there. And then we have a gentleman taking care of the office called Malaka Silvio. Then on the ICT team that is in charge of what we are happening currently with most of our members joining virtually, we have the leader team of the team is Jeremiah Wishiri. They are assisted by Scal there. Then we have property. We have a number of our properties. You know, KenGen is tenant at the Stima Plaza, among other properties we have. So the team is led by Anthony Mangeli at the tail end, and then we have a gentleman back in the office called Francis Minor. Then we have the admin team that ensures things run as expected, led by Grace Kimani there. And then we have Jane Namnyak back in the office. So, Chair, those are the team members that ensure that things run well at the Secretariat. Thank you.
Thank you, Josephat. Don't sit down now. Give us the notice convening the meeting so that we can get to the substance of matters now.
Chair, I'll take you through the notice. This is the notice of the annual general meeting currently happening. So notice here given that the annual general meeting of KenGen Staff Retirement Benefit Scheme, popularly known as DB scheme, will be held at the Geothermal Plaza Grounds or Carrier on 28th June 2024, today Friday. And the meeting was expected to start at 10 a.m. The agendas for the meeting, Chair, is one, to read the notice convening the meeting, receive the chairman's report, also receive fund manager's report, custodian report, and also to receive the scheme's audited financial statement for the period ended that 1st December 2023, together with the auditor's opinion and report. Then we will receive the LB remarks, the preliminary session where we will handle the question and answer session, and any other business that due notice had been received. So this is a hybrid AGM where some members are joining virtually and members locally are joining physically, and the virtual members are being held through the Zoom webinar. This notice was issued by the order of the board on 7th June 2024, signed by myself, Josephat Muriuki, the CEO and the Trust Secretary. Thank you.
Thank you, Josephat. So, ladies and gentlemen, the notice was given in good time, and therefore this meeting, you have been given sufficient notice to be here. So, dear members and stakeholders and colleagues, it is my pleasure to present the 24th annual report for KenGen Staff Retirement Benefit Scheme, covering the financial year ending 31st December 2023. As chairman, I'm honored to reflect on another year marked by both opportunities and challenges, requiring agility, resilience, and strategic foresight to navigate. At the core of our mission is a steadfast commitment to our members' financial well-being and retirement security. Everything we do is guided by the principle of serving our members' best interest and ensuring that they can retire with dignity and peace of mind. The economy demonstrated resilience, expanding by 5.9% in the quarter 3 of 2023 compared to 4.3% recorded in the previous year. However, the business landscape experienced deterioration target mark. The economy is expected to maintain moderate growth driven by continued recovery in agriculture and resilience in the service sector, with unpredictable weather and physical constraints as likely to affect growth. The Kenya shilling weakened further against the US dollar by 5.6% quarter to quarter and by 26.8% year on year to close at 156.5%. Note, we have had some recovery since then. And when we did this report, those were the indicators. This decline was attributed to negative net capital flows on foreign currency debt service. The shilling is expected to continue weakening gradually. This is on the back of cost, increased debt service, interest rate cycle, potentially lower export receipts due to reduced external demand and geopolitical factors which could trigger further capital outflows. Please take note that this is a dated report and a lot of these things have not gone as indicated here. There's been a lot of reversals on that score. The overall annual inflation average of 6.8% in Q4 of 2023, a slight decrease from 6.9% in the previous quarter. The overall inflation in 2023 averaged 7.7% compared to 7.6% in 2022. The marginal decline in the last quarter of the year was mainly influenced by a drop in food inflation, with the food index decreasing from 8% in Q3 of 2023 to 7.7% in the fourth quarter of the year due to lower prices of seasonal foods. We anticipate that inflationary pressure may persist in 2024 due to weakening currency, evaluated impacts on the cost, the reduction of government subsidies, rising taxes, and unpredictable weather patterns. Nonetheless, the best effect will contribute to lower inflation numbers in the short term. The yield curve experienced an upward movement in the fourth quarter of 2023, resulting in a total increase of 2 basis points quarter on quarter, 2.6 year on day, and 364-day T-bills closed the quarter at 15.98%, 15.97%, and 16.1%, respectively. Interest rates are expected to remain elevated due to monetary policy tightening, aggressive domestic borrowing by government, and tight liquidity in the market. The fiscal outlook remains challenging, coupled with high external interest rates, implying increased domestic funding by government compared to foreign funding. During the fourth quarter of 2023, the stock market continued its decline at a decelerated pace as all indicators closed in the red. Quarter on quarter, the Nairobi Oil Index recorded 3.3% decline. The NSE 25 index lost 3.8%, and the NSE 20 index lost 0.5%. The downturn is attributed to existing macroeconomic challenges that have significantly impacted the equities market, resulting in foreign outflows. Primarily, the dollar repatriation issues and the depreciation of the currency led to negative sentiment in the local stock market. We expect stock market activities to remain subdued in the first half of the year, despite attractive valuations and moderate earning growth, with further currency weakening and high fixed income yields, which will likely continue to dampen recovery. Our strategic direction emphasizes a disciplined approach to long-term investment, with a focus on preserving and growing the pension scheme's assets to meet the future retirement needs of our members. We remain committed to a diversified investment portfolio that balances risk, return, and liquidity. The current strategy aims to shift from immovable assets class to mainly traditional ones to enhance liquidity, which has been gradual to capture value across market cycles. Central to our strategic direction is a robust risk management framework that enables us to identify, assess, and mitigate risk effectively. We prioritize sound governance practice, ensuring transparency, accountability, and alignment of interest with our members and stakeholders. By maintaining a strong governance structure and risk management discipline, we seek to safeguard the financial security of our members' retirement benefits. Our board composition reflects the diverse mix of skills, experts, and experiences, ensuring robust oversight and strategic guidance for the pension scheme. Composed of seasoned professionals, backgrounds in investment management, finance, risk management, legal, and governance. Our board brings a wealth of knowledge to its oversight responsibility. We are committed to maintain a board structure that prioritizes independence and objectivity in decision-making. Our board includes sponsor and member trustees who bring impartial perspectives and act in the best interest of our members. This independence underscores our commitment to fiduciary duty and ensures accountability to stakeholders. There were changes in the members of the Board of Trustees, whereby Mr. Joseph Shitati, Mrs. Mary Malu, Mr. Patrick Kimemia retired, which led to appointment of new members. Mr. William Rahedi, Mr. Ronald Kibet, Teresa Karani, Mohammed Abdi, Jennifer Duo. The board wishes to thank the outgoing trustees for their involvement in steering the scheme to greater heights and welcome the incoming trustees. We believe their presence will strengthen the board to deliver its mandate. Stakeholder engagement, sponsor. We recognize the vital role that the sponsor play in supporting retirement savings and benefits for its members. We actively collaborate with the Human Resource Office to provide them with the tools, resources, and support they need to facilitate retirement planning, members' education, and new staff enrollment in the pension scheme. Members, we seek to ensure our members' satisfaction with the scheme as they transit from employees of the sponsor to senior citizenship. We take cognizance of scheme's aging profile, which we anticipate a declining active contribution and growth of our pensioners book. During the year, our active contributors dropped by 32.5% to 27 members, while the pensioners and beneficiaries in our books grew from 1,259 to 1,266. We are aware of the importance of a pension medical needs, and this is a service we have continued to enhance over the year. During the year, we increased our health care providers by 1, giving a choice of 5 providers. We also saw an increase in pensioners uptake from 625 to 715, which is confirmation of the positive impact the service continues to give. Pension industry changes in legislation. The pension industry has experienced phenomenal growth over the years, but in value of retirement benefit assets under management, currently Kenya shillings 1.7 trillion, and the supporting legislative framework. During the year, the Cabinet Secretary for the National Treasury and Economic Planning amended Legal Notice number 18 of 2024 to require valuation of the scheme debt instruments to a new provider. 1, the value of debt instruments held to maturity must now be reported at amortized cost. 2, the fair value method shall be used in determining the value of both debt instruments available for sale and equity. Furthermore, Legal Notice number 19 of 20 and 21 and 22 of 2024 have extended the impact to various regulations governing the determination of net interest to be declared and credited to members. As per these amendments, net returns declared and credit to members' accounts will now exclude unrealized gains and losses arising from change in the value of debt instruments held by the scheme at the end of the financial year. The effect of this, the fund is likely to hold bonds to maturity due to its long-term investment horizon, which will receive full repayment of the principal amount. The impact on performance is that the scheme shall have a stable return on accrual of coupon and interest without reporting capital losses, which occur if reporting on mark-to-market basis. Financial performance. Stable funding position. Maintain a stable funding position is essential to our ability to fulfill our long-term obligations to members. We remain optimistic. The sponsor's commitment to make monthly payments as set out in the accrual deficit funding schedule, which these funds are invested by the scheme's investment managers, is highly yielding government securities, bringing us towards our goal of strong and resilient funding position. During the year, the sponsor remitted 984.6 million shillings towards the deficit funding, bringing the amount paid from July 2019 to December 2023 to 2.833 billion. That is 83.8% of the total deficit amount of 3.38 billion has been settled. The scheme's latest actuarial valuation was conducted in December 23, which has resulted to a scheme funding position of 84.2%, being an improvement from December 2020's position, which retained a funding position of 76.9%. The December 23 position being a funding level of 8 points, hence the amount of deficit is 1.659 billion, which requires sponsor funding to return the scheme to 100%. Prudential investment strategy. Our investment strategy is guided by a commitment to prudential risk management and long-term value creation. While financial markets experience fluctuation during the year, our diversified investment portfolio remained resilient, generating competitive returns and preserving capital. Our disciplined approach to asset allocation and active management has enabled us to navigate market challenges while capturing opportunities for growth. The scheme's portfolio has been well diversified to various asset classes: real estate, government securities, equities, offshore, and money markets, which cushion the scheme from market volatility. To ensure our liquidity objective is met, the scheme fully exited its investment in Roslyn Springs through the sale of 17 townhouses, reducing the scheme's real estate allocation from 52.2% recorded in 2022 to a close of 49.2%. The scheme targets to gradually reduce its exposure in real estate to 30%. Hence, the board has embarked on the process of exiting other illiquid investments as the board focuses on making the scheme more liquid. The proceeds of these exits are being reinvested in high-yield liquid investments such as government securities. During the year, the investment portfolio endured volatility markets coupled with inflation risks, factors such as rapid rise in interest rates, persistent currency volatility, which despite this, the fund value increased year to year to close at 8.6 billion as of December 31st, 2023, and to credit the members' account a return of 5.4%. Our goal is to ensure our returns beat inflation, and we continue to position the asset mix coupled with the rebalancing strategies to recover from the periods of such bumpy investment environment. In closing, let us reflect on the achievements, challenges, and lessons learned over the past year. As we celebrate our success and learn from our experience, let us use these insights to guide our actions and decisions in the year ahead. Thank you once again to the board, the secretarial team, the industry regulators, RBA, investment managers, actuarial custodians, auditors for their ongoing support, dedication, and commitment to KenGen Staff Retirement Benefit Scheme, mission and vision. Thank you, ladies and gentlemen. At this point, I have given you a report from the trustees as their chairman. Now I'll ask Dan Githogo of Sanlam Asset Managers, who will present a fund manager's report.
I don't know about the explanation. I don't need nobody motivation. Happiness concern me. Happiness concern me.
Thank you, Chair. Good morning, Board of Trustees. Good morning, members of the scheme. So I'll take you through the fund manager's report. It's a joint report for the fund managers of the scheme for the period that ended in 2023. It's a report that's shared by Sanlam Investments and Gen Africa Investments, who are the fund managers. So the report is what you can see on your screens. And basically, it's a report that's, it's a three-part report. I'll talk about the role of a fund manager, what we do for the scheme. I'll give a review of the markets, much of which the chair has mentioned in his speech. And then I'll give an overview of how the scheme was invested, how the scheme performed in 2023, as well as an outlook for this year, 2024. So to start with, the key roles of a fund manager is what we've listed on those slides. Key among them is that we advise the Board of Trustees on how to go about investments for the scheme. So the scheme is governed by the Retirement Benefits Authority, and RBA has regulations on where schemes can invest money. And broadly, schemes can invest in those asset classes that I've listed, which I'll quickly go through. There is what we call fixed income. And fixed income members is investment in interest-bearing securities, investments in investments like securities like treasury bonds, fixed deposits. And when you go through how your scheme was invested, a large portion of the DB scheme was invested in fixed income. We have what we call equities. Equities is investments in the stock market. So again, your scheme has invested in the stock market, shares like Safaricom, KenGen, Equity Bank, etc. And they're all listed in the booklet that you have that indicates financial statements. We have what is called offshore. Members offshore is defined as any investment that is domiciled outside East Africa. So again, your scheme was an investor in offshore for the year 2023, and it's an investment that did quite well for that period. And we have what is called alternatives. These are investments in property, private equity. Your scheme is a big investor in property, as the chair has outlined. And, that property did well for the year that ended in 2023. We're also required to invest the scheme assets in accordance to a document called the investment policy. This is a document that is drawn by the Board of Trustees, and it more or less guides on how investments should be done for all those asset classes that I've listed. We conduct research on asset classes. We report to trustees on a regular basis. And members, I'd like to confirm that we've met with your trustees at least 4 times in the year 2023. And during these meetings, we have a lot of strategic planning and thinking. And, we put our minds together in terms of proposals and recommendations. And we're also required to submit returns to the regulator, the RBA. So that's the role of a fund manager. At the next section, I'll give a highlight of what markets did, what the economy did in 2023. Again, much of this the chair has mentioned, so I'll just probably highlight them from a different perspective. To start with is what we call economic growth as measured by GDP. It's more or less an indicator of how the country has done from an economic perspective. If you look at that graph, it shows the trend of GDP growth from 2016. The message here simply, members, is that from COVID in 2020, we've seen an economic rebound in the country. If you look at COVID times, that's where we hit the lows, close to negative, about 0% growth. But since then, the economy has recovered, quite nicely. The next section, where we look at currency, and members, when it comes to matters of economy and markets, the biggest impact on the markets was currency. What happened to our currency in 2023? For those who might recall, last year we had periods when there was US dollar liquidity. It was very hard to come by US dollars last year, and that was very publicly highlighted, and I would imagine most of us are aware of that. That had negative impacts on our economy and the markets. So to start with, because of that illiquidity, we saw the Kenya shilling weaken significantly. We started the year last year, 2023, when the shilling against the dollar was at about 120, and we closed to about 156 levels thereabout. That was a depreciation of 26%. We have not seen such a depreciation, I think, since 2011 as a country, and it was quite steep. And unfortunately, what it did is that it eroded foreign investor confidence in the country. So as we look at later slides, in the equity markets, foreign investors are very impactful and influential. They invest quite heavy sums in our equity markets. And when we had this loss of confidence because of the currency depreciating, we saw many of these foreign investors try to pull out from the equity markets. And as a result, we saw a decline. I'd also like to mention that one of the things that also led to this currency decline is because last year there were murmurs that, Kenya was not in a very good, Kenya's debt sustainability position was not in a very good place. There were fears from various quarters that Kenya could struggle to pay a euro bond that was maturing this month in June. And as has been mentioned by the chair, things really turned around in 2024. And just to give a sequence of events, there was a boost of confidence when the IMF, gave a statement that they would, lend the country money in the month of December. That was a key boost of confidence because what happened is that investors, market players, became confident that Kenya would be able to pay the Eurobond that was maturing in June. And then in the month of January this year, 2024, Kenya issued another Eurobond to repay this Eurobond that, matures in June. The highlight of that is that over the last 3 years, post-COVID, African countries had struggled to access the Eurobond markets. So with Kenya being able to access, that market, to be able to borrow money through Eurobonds, it was, what I'd say, a very strong shot in the arm for the country. And all of a sudden, we saw a lot of confidence. Investors came in, foreign investors, in the month of February. And for those who might recall, the Kenya shilling strengthened significantly from about 160 to current levels of about 130. All of that is because of the change of confidence. Initially, there were fears that Kenya would not be able to pay the Eurobond debt, and all of that changed in February because of the money that it came from IMF and the shot in the arm that we got. So right now, our currency is doing quite well, and currency is trading at about 120 shillings against the US dollar. So that was a big thing. And if it's a highlight that you'll take away from what markets did, it is the story on our currency. Inflation, I will not belabor what the chairman mentioned, but inflation was generally quite high last year in 2023. At some point, it hit 9%. But again, inflation has also come down this year in 2024. Inflation is at about 5 to 6%, majorly because of food prices coming down, the good rainfall that the country has had. In the next slide, we look at interest rates. So I'll just give a key highlight on what's happened to interest rates. So interest rates, members, in 2023 edged up significantly. And I'll give an example of a treasury bill that is issued by the government. At the beginning of the year, treasury bills, a one-year treasury bill was at about 13%. As we closed the year, a one-year treasury bill was at 16%. So interest rates went up. Now, interest rates going up is good and bad. It is good for new money, new investments. Whatever contributions that come in for the scheme, all those new money will be invested at good rates. But whatever the fund had already invested in previous years, because the fund was still in existence before 2023, all those investments are normally discounted. And it's simply because they were bought at, say, 12%, which was the prevailing rate in those years. But now new bonds, new treasury bills are being issued at much higher rates of 16%. So if an investor like the KenGen scheme was to decide to sell the bonds that they bought at 12% in previous years, if they were to sell them when new bonds are being issued at 16%, they will have to show a discount. So what we'll see, and we'll see as we talk about performance, bond performance was not as strong. It was quite moderate for that period. And the major reason is because interest rates went up and most of the scheme investments, most of the scheme bond investments had already been bought before 2023, and they generally had to be reflected at discounts. But again, just going on to what the chairman had mentioned, we expect these discounts to unwind, and in later years they will become gains as we hold these bonds to maturity. The DB scheme is a scheme, it's a going concern. I mean, KenGen as a sponsor, will be there for the very foreseeable future. So it will be very unlikely for us in the Board of Trustees to sell these bonds. So these bonds, we will hold them up to maturity, and those discounts will unwind in future years. If you look at market performance, in the next slide, equities. As I'd mentioned, equities were negatively impacted last year, members, because of the fact that foreign investors who are very influential in our equity markets did not have confidence in the currency. So what we saw them selling, and as a result, if you're able to see that slide, the red bar graph, equity markets last year were down by about 27%. That is the stock market. Whatever the scheme had invested in stocks, did poorly for that year. But the good news is that now in 2024, equity markets so far for the first 5 months of the year are up by more than 20%. And again, the major reason is because there is now a renewed confidence in our currency. So the same foreign investors who sold last year have come back this year and are investing quite well. So that is it with the markets. So just in brief, members, last year was tough for markets, and it was not, your scheme was not in isolation. Equity markets did not do well. Bonds markets did not do well for the reasons that I've given. But on a good note is that in 2024, the same markets that did not do well have rebounded quite strongly, and 2024 is looking quite attractive and quite good. And I will share the update on performance for 2024. So in the next section of the report, which is the last section, we'll just review how investments, performed. So the first slide, we look at asset allocation. And again, members, this is the same information that is in the booklets that you have in front of you. So asset allocation just shows how your fund was invested, where your investments were placed. So the largest allocation was in property. So 49% of your fund was invested in property, 4.1 billion shillings, followed by government securities. 3.1 billion shillings of your fund was invested in government securities, that is 38%. 5% of your fund was invested in the stock market, 6% in deposits. So clearly your largest allocation is invested in property, followed by government securities. And I could note, property generally did moderately well, had positive performance. Government securities and equities are the asset classes that struggled last year. Deposits and offshore did generally well in 2023. In the next slide, where we look at performance, and members, this is the performance of the scheme. It's a historical trend all the way from 2016. So I'll just speak to 2023 and the update for 2024. So 2023 return was 5.9%. And members, if you compare the scheme's return compared to other schemes, this scheme generally did well. The average return for schemes last year in 2023 was 1.2%, as measured by a survey that is done by Zamara. They look at 438 pension schemes, and the average return from those 438 pension schemes was 1.2%. So your scheme's return was 5.9%. A large contributor of that was the returns from property. your scheme has invested in generally good property that have, done well. So those really helped to boost the return of the scheme when the other asset classes were not doing quite well. 2024, as I mentioned, is turning out to be quite a good year. So for the first 5 months of 2024, between January and May, the scheme's return is up by 10%. And it's more or less of an indicator that return this year will be double digit. It is likely that return could, could be in the region of about, close to 15% for the year. So we are seeing very good returns for the scheme for this year in 2024. And that's quite encouraging in terms of how the schemes have been invested. Finally, as a close off, in terms of outlook, I've spoken to this, but just in brief, 2024, all asset classes are doing well, led by equities. The same equities that had poor return in 2023 is leading the charge in 2024. Government bonds are doing well. We also expect property to do well in 2024. And we expect that 2024 will be quite a strong year, probably the strongest year in the last 5 years for the fund. And our expectation is that the fund return will be double digit as given by what we've seen so far. For the first 5 months of this year, 2024, our return is up by 10%. So that, members, that's the end of the fund manager's presentation. And we'll take reactions at the Q&A session. Thank you.
Eva, are you ready?
Thank you, Chair. Good morning, members, pensioners, fellow service providers, of course, the Board of Trustees. Good morning. My role here today is to give a confirmation of the numbers that the fund manager has just taken you through. But before I do that, I'll go over what our role is as a custodian for the scheme, and then I'll give a breakdown of the assets that we're holding as of December 31st, 2023. And because we're dealing with your money, retirement money, I'll go through what our risk mitigation measures that we put in place to protect your money, and of course, give a confirmation. So our role as a custodian, first and foremost, is to ensure efficient settlement of your investments. So once your fund manager has gone out there, decided what investments, they've done their research, decided what investments to get into, they'll give us instructions. Our responsibility is to ensure that those instructions are settled safely. If it's a purchase, we'll ensure that that investment has been received and registered properly in the scheme's name. And if it's a sale, we go through and ensure that all the money has been received and credited back into your scheme account. We also keep in safe custody all your assets, and I'll give a breakdown of all the assets that we hold for you. As a custodian, we also do asset servicing, and basically that means we keep track of all your income. So if there are any coupon payments, any dividends that are coming through, we track them and ensure that all those income is received, credited into your scheme account, fund manager is notified so they can reinvest your money. We also do account opening. We facilitate that process on behalf of the trustees. And those accounts are open in our nominee name. We ensure those assets are ring-fenced. They're not commingled in any, or rather they're not commingled with any assets that we hold for the bank, and neither are they commingled with any other client assets that we hold. We also facilitate the process of opening offshore accounts for you, and also cross-border accounts as well. As a custodian, we do meet your trustees on a quarterly basis, where we give a detailed account of all the transactions that we processed during the particular quarter. We will give a detailed account of all the assets that we are holding, explain any reconciling differences that may be between ourselves and your family, and explain the same to your trustees. We also are in constant interaction with your secretariat. We also communicate with the fund manager on a daily basis. They have access to our system where they're able to keep track of all your transactions so they can make investment decisions. When they see there's money that's there to be invested, they'll be able to do that, and they're able to see those transactions on a real-time basis. We also do submit returns to your regulator, and we do that on a quarterly basis, and the regulator here today can confirm that we do submit those returns on behalf of the scheme. As a custodian, we also do payments. We are given instructions to make payments to your scheme's account so that the members and the pensioners can be paid. We also pay any scheme expenses as and when it's needed. We also assist the trustees in tracking compliance by making sure that contributions are received. And last but not least, as a custodian, our responsibility is to whistleblow. If there's any danger to your scheme, we'll report to the relevant parties, to the fund manager, the trustees, or the regulator and administrator. Our job is to ensure that your assets are protected at all times. So to confirm what we were holding as at December 31st, 2023, this is the breakdown of the assets that we're holding. We had demand deposits, those are your short-term deposits, valued at 26.5 million shillings. We were holding a cash balance of 193.4 million shillings. Corporate bonds valued at 34.3 million shillings. Quoted equities at 419.4 million. We also did have offshore investments for the scheme, valued at 147 million shillings, 9,715. Property at 4.3 billion shillings. Regional equities valued at 1.6 million. Term deposits at 477.3 million. Your treasury bonds are 3 billion shillings. And your treasury bills valued at 144.1, giving a total fund value of 8.7 billion as of December 31st. So where there's money, there's risk, and how do we mitigate against those risks? What we ensure is that anybody that gives us instructions to handle your investments has proper instructions or other proper mandates in place. And I want to confirm to you members that those mandates are ready, not ready, they are actually in place. With your trustees, the fund manager, the secretariat, anybody that we're dealing with, we have those mandates in place to ensure that the right persons are actually giving us instructions to handle your investments. We also have clear SLAs, those are service level agreements that will set forth how we handle your investments. We also have proper safe custody facilities. Your scheme has title documents. We have secure strong rooms that actually have those title documents for the scheme. In terms of processing your instructions or other your investments, we have clear segregations in our roles and responsibilities, and these are configured in our systems in the bank, as well as our procedures. So there's a make-a-checker process. No one person will handle the investment. There's always somebody counter-checking what has actually been done. Your assets, again, as I mentioned earlier, are registered in our nominee name. So in the unlikely event something happens to NCB, as a bank, your assets are safe. They're not in the bank's balance sheet, neither are they commingled with any other client's assets. We also have a clear indemnity insurance cover in place to ensure if there's negligence on your part, your money is secure. And then, of course, we have a disaster recovery system in place to ensure there's continuity in processing of your investments should there be any interruptions like what has happened this week in our current premises. Because investments are sensitive in nature, we can be able to continue processing, and that is in place and was actually invoked this week as well. So finally, members, I want to confirm to you that all the income that was earned from your scheme for the year 2023 was collected on time. All your investments were executed within the laid down regulations. All your investments were executed as per your fund manager instructions, and that your investments are safe with us. Thank you for listening to me. I'll hand the meeting back to you, Chair.
Josephat, I think we go to the second poll.
Thank you, Chair. Request the ICT team to project the second poll. This is majorly related to the previous poll that we have done. Chair, we have shared the second poll, and I read as it is. Which of the following topic issue should the scheme educate you more on to? Or which of the following topics should the scheme educate you more of? This is a single choice question. First answer on your members' benefits. Number 2, how to add more saving to your retirement kitty. Number 3, income drawdown fund and how it works. Number 4, financial planning while in service and in retirement. And then retirement planning. Repeat the question again, just to give members time. Which of the following topic should the scheme educate you more into? 1, your members' benefits. 2, how to add more saving to your retirement kitty. The income drawdown fund and how it works. Financial planning while in service and in retirement, and retirement planning. I'll request the ICT team to project the result. Thank you, Chair. As indicated there, 20% of our members would want to be more involved they're more educated on their benefit statement. Additional 12% would want to just how to add their retirement kitty and make it more fun. 24% would want to understand more of the income drawdown fund, which is a fund under the DC scheme. That 3%, which is a bigger number, would want to be more educated on financial planning or in service and retirement. This is majorly just to enable members manage their finances better in service and retirement. And also 11% of the people who participated in this poll would want to be involved more on the retirement planning. Chair, this is a better education and also directing us on where to focus more during the member education. Thank you.
Thank you. This has been noted for action in our future training and education programs. Now, I mentioned to you that we're in the business of building now and in the past for the future. And the actuarial is a major player in this, making sure you're doing it right. So I'll ask Linus to come and present the report on the actual report for this particular scheme.
Thank you, Chair. Trustees, fellow service providers, pensioners, and other members, good morning. My name is Linus Mahulo. I represent a firm called Zamara. Zamara are the actuaries of the scheme, and I'm here to present our report for the actuarial evaluation that we carried out as of 31st December 2023. So in terms of the areas I'll be covering, I'll talk very briefly about what is the role of the actuary, what do we do as actuaries. I'll talk about briefly about the scheme benefits that you members enjoy. I'll look at how the scheme has grown from the time we did the last evaluation from scheme membership, looking also at scheme assets. Then I'll get into the actuarial evaluation results where I'll discuss those briefly. Then I'll look also into another role that we do, which is calculating or confirming the calculation of member benefits. When it gets to the market highlights, those have already been talked about by the chair and also by the fund manager. So I'll skip that last bit in terms of the market highlights. So what is the role of the actuary? So when you look at a defined benefit scheme, a defined benefit scheme is one which promises you members a benefit based on a formula. And once that benefit starts being paid, it is paid for your life in most cases. And also, if you pass on, then it reverts or starts being paid for to your spouse or even to your dependents. So in essence, you do not know, or it's very hard to predict how long that benefit is being paid for or it will be paid for. So what an actuary does, an actuary simply says, or an actuary is able to calculate the value of those benefits, the value of all the future promised benefits to all the members, if they are pensioners, if they are inactive, and so on. So that is really our role. And following from that, now we're able to assist the trustees also set the investment strategy. How do they need to invest the money? Because now we're able to predict the pattern of payments going out. We also advise on benefit calculations, and we also do other or provide other miscellaneous advice touching on the costing of pension increases and the impact of any legislation to the members' benefits. Sorry, comes. Okay. So when you get to the scheme benefits and contributions, what we see is that the benefits in the defined benefit scheme are determined by a formula. And how does that formula work? So there are two parts to the formula. There is one that applies to any service that a member had before 31st December 1999. So any service prior to 31st December 1999, the calculation of the benefit is that you take the service, multiply it by 3% and multiply it by the person's salary. So that is the service, or that is what will give you a pension for service before 31st December 1999. For service after that date, so from 1st of January 2000 going forward, you do the same thing, but now rather than multiply by 3%, you multiply it by 2%. So meaning when a member's benefit is being paid, there are two sections to it. You look at service before this 31st December 1999 and service after 1st of January 2000. So when you add those two together, it what gives you your pension as a member. Now, what happened subsequently is that the scheme was closed for new members joining and also for future accrual for a group of members as well. But however, for what are called continuing members, those members who are aged above 45 on that day, 31st December 2000 and 2011, they are continue on accruing service. So they did not move to the DC scheme. Also, when you retire, after we've calculated using the formula that I've just described, you're also eligible to take 1/3. So we do the calculation, then 1/3 of that pension you can change into cash or you can receive as a cash lump sum. That is called commutation. On top of that, for the service that was prior to 1st of January 2000. So this is that section which is being calculated using 3%. Guaranteed pension increases of 3% apply every year. So that section gets guaranteed increases at 3%. And the other section, which is after 1st of January 2000, the increases are discretionary, meaning the trustees look at the funding level of the scheme. And if there's sufficient funds, you are able to get an increase to that value of pension. On top of that, apart from pension benefits, there are benefits also provided on living service if you resign, on ill health if you leave, unfortunately, due to ill health, early retirement, or if you pass on while in service, if you die while in service. In terms of the contributions, sorry, maybe you can go back to, yeah, sorry. In terms of contributions, members contribute at 10% of their pensionable salary, and the sponsor, on the other hand, contributes what is known as the balance of cost. So depending on the funding level of the scheme, you did hear the chairman say that the sponsor has been paying an additional amount for the deficit. So the sponsor also puts in additional money to cover any deficits within the scheme. But apart from that, the current sponsor's contribution is at 20%. So the sponsor is paying 20% of members' pay, but also paying additional amounts if there is a actuarial deficit in the scheme. Okay, in terms of membership, so what the chairman did state is that the membership of the scheme has been reducing. So this is a closed scheme, which means there are no new members coming in. So as you move along, every year, the membership will reduce. So there are various categories of members. You've got active members. Those ones are the ones who are still in employment and accruing future benefits. Those are 28. You've got the non-continuing. These are those members who stopped accruing benefits in 2011, but moved on to the defined contribution scheme. Those are 830. We've got 715 pensioners, spouses and dependents in receiving benefits at 316 and 185. And we've got a few members who have left and have still benefits left behind. These are the deferred members who are 59 and a few members with outstanding benefits as well. In terms of scheme assets, we've been taken through the scheme assets, and the chairman and even the fund managers, they talked about the value of the scheme assets, and that there were certain regulatory changes that happened at the end of last year in terms of how government securities or fixed income securities will be valued. So on this slide, what I'm showing you is what is called, or the valuation on mark to market, basically taking assets at their market value. So if assets were taken at their market value as of 31st December 2023, based on the audited financial statements, the value of the assets was 8.6 billion shillings. And you can see there clearly the distribution between the various asset classes. The one thing that has been noted is a breach on property, which is higher than the RBA maximum of 30%. So it sits at about 47%. But the chair has already mentioned the steps that have been taken to reduce that amount. The next slide is looking at now the new valuation basis, whereby now the unrealized gains and losses on fixed income securities will not form part of the valuation of the government securities and other bonds. So here, there was a 261 million loss on government securities. So that has been written back. And you can see here now the assets increased from 8.6 to about 8.8 billion shillings. And that is the valuation basis we will use in terms of our actuarial valuation. Next slide, please. So in terms of the actuarial valuation, like I've said, what we're doing is determining whether the scheme has sufficient assets to meet its liabilities. That's really what we're doing in a nutshell. But on top of that, apart from just doing that, we also have to fulfill certain statutory requirements. The Retirement Benefits Authority requires that an actuarial valuation be carried out once every 3 years. The last time one was done was 31st December 2020. So we needed to do one as of 31st December 2023, and then look at the deficit and recommend any contributions that are required from the sponsor. So what we do when we do an actuarial valuation, like I've said, we're looking into the future of the scheme. We set aside certain assumptions, and these assumptions are looking long-term. How do we expect the scheme to perform in the long term? And we also look at the same basis that or similar basis to other schemes in Kenya and ensure that everything that we set is also relevant for Kenya and also similar to what we do for other schemes. So like I've said, this particular actuarial evaluation we're doing as of 31st December 2023. Before we are done as of 31st December 2020. So this is the current one. And following this one, the next one will be required as of 31st December 2026. So the results of the actuarial evaluation are as follows. The total liabilities. So what the scheme owes members in terms of benefits, in terms of what is to be paid out, is 10.5 billion shillings. So that is just taking into aggregate everyone's benefit and putting it together. What the scheme owes the members is 10.5. The total assets, and remember I said now we are using a different valuation basis. And so the total assets on the valuation basis we're using is 8.9 billion shillings, meaning that the deficit or the liabilities are higher than the assets by 1.7 billion shillings. And remember what was said, the sponsor has gotten into a plan on how to fund this actuarial deficit going forward, but also to say in the last actuarial evaluation, the deficit was 2.4 billion and the funding level was about 77%. So there has been progress towards covering the deficit, and with the commitment from the sponsor that this will continue on, we expect that to see this deficit keep on reducing as we move along. But it has been noted that the funding level is less than 100%, and there's already a current or there's already a deficit funding plan in place. So in terms of benefit calculations, I think what I would just like to say is that when you as a member are retiring, we ensure that the calculation of your benefits is done correctly. So the Secretariat does the first bit of the calculation. It then comes to us just to ensure that everything that has been put in there is accurate. So we establish the service, ensure the service is correct, the final pensionable emoluments are correct, and we then provide the advice to you as members to ensure that you make the right choice in terms of whether the amount of pension you're getting, how much you will exchange for cash, and various other options that could be open to you. So in terms of market highlights, like I said, this has already been covered by the fund manager and also by the chair. And this was really looking at the rate of inflation, the Kenya shilling, how it has appreciated, and how and what else has happened in the market, on the equity market as well. So I will not go into this because this has already been covered by the other presenters. So thank you very much. We'll take questions during the Q&A session.
I will now upon the scheme's auditors to confirm the financial position of the scheme as at 31st December, together with the audit opinion.
Thank you, Chair, trustees, members, fellow service providers. Good afternoon. My name is Kelvin Kailikia, representing PwC, who are your auditors. That's the scheme set out on pages 66 to 97, which comprise a statement of net assets available for benefits at 31st December 2023, and the statements of changes in net assets available for benefits and cash flows for the year then ended, and the notes to the financial statements comprising material accounting policies and other explanatory information. In our opinion, the financial statements give a true and fair view of the financial position of the scheme as of 31st December 2023, and of its financial performance and its cash flows for the year then ended, in accordance with IFRS accounting standards and the requirements of the Retirement Benefits Act. Our audit opinion was signed on the 26th of March 2024 by our partner CPA Banis Kimasha, practicing certificate number 1457, who is engagement partner responsible for the audit. Thank you, and back to you, Chair.
Thank you, Kelvin. Members, I take it that you have all read this report. You have tried. Keep reading. It's been attested to by the auditors as correct and being a fair presentation. I now wish to take you through the following agenda items as stipulated in the Retirement Benefits Act. During the year, the meetings held for the full board and committee were as follows. Full board, we had 6 meetings. Administration and Communication Committee had 4 meetings. The Audit and Risk Management Committee had 4. Investment and Strategy Committee had 6. The trustees' remuneration is disclosed in the financial report, page 92. Currently, the scheme pays sitting allowance of 28,000 to the board chairman and 24,500 to board members, all net of tax. Due to prevailing bearish economic conditions, the board is in the course to reviewing its remuneration policy to align with the recently gazetted trustee remuneration policy guidelines by RBA. I would like to also confirm that there were no changes in the benefit structure and contribution rate during the year under review. I would like now to invite David Lentillo from RBA to present the regulator's remarks.
Thanks, Madam Chair, and the Board of Trustees, members, good afternoon. Good afternoon again. Thanks so much. I'm David Lentillo from Retirement Benefits Authority, and it's a great pleasure to be part of this forum. And I think it's one of the objectives to actually be with the members and hear from them, and hear also what the information are being disseminated to us now. We are actually in concurrence with the information you have provided, and also give you some update on what we do as within the industry. So I'll just take you brief on our mandate and some of the statistics within the industry. Your schemes, basically, which they are within our purview, what are the status, overview of DB schemes. I think primarily we'll be able to focus maybe more on DB schemes and some of the changes within the RBA or the pension industry. So one of our mandate is actually to oversee the licensing of all the schemes. So any sponsor, any employer who wishes to establish the schemes, it should be licensed within the authority. And once it's licensed, now that scheme becomes part of our purview. So it means that all the schemes will be able to see how they are operating, how the Board of Trustees are doing their work. They are doing within the confines of the law and the regulation which are provided by the regulator. Then safekeeping of those funds, we also protect the interests of the members. We ensure that you as a member, you're not compromised in any way, may it be in terms of what you're gonna be paid, may it be in terms of any fraud or any decision that the Board of Trustees are taking. It should be for the interest of the members, and there's no way that any decision they make as a Board of Trustees will be able to jeopardize your interest as a member. Then we develop the interest in the industry, more specifically on the pension industry. Any innovation, any new product which comes to industry, then we oversee the coming of that kind of products. As long as this for the interest of the members and for the interest of the pension fraternity, then we always ensure that there's frequent development of that industry. And that's why we see we see the regulations, guidelines, practice notes we put forward to the industry, so as now they can be able now to ensure those products are actually within the interest of the members. Then on the policy matters, we also advise on the policy matter on the National Treasury. We implement those policies, those guidelines, those regulations. We ensure that the Board of Trustees are fully in compliance on those guidelines, those practice notes, on those policy which are on board. Then looking on the industry as a whole, I think currently as of June, I think the previous slides, please. So looking on the industry as a whole, I think we are currently at 1.7 trillion, which is a plus for the pension industry. And that's a good contribution to the GDP of Kenya. I think we are contributing roughly 12% of the GDP. Then the registered schemes, we are currently 1,001 schemes. I think there's reduced slightly to around 907 schemes. And why? Because of the umbrella schemes. Most of the schemes are now moving, some of the small schemes are moving to umbrella arrangement. So as now they are more participating within an umbrella schemes. So we see some decline in terms of the number of schemes. For DB schemes, I think DB schemes are reducing, and you have heard that most of the schemes are closed. And we are seeing that because of the aging profile of the members of the DB schemes, in the future, we'll see phase out of those kind of schemes. So currently we have, I think, roughly around 40 to 45 around DB schemes, mostly in the public sector, there are around that 5 schemes, which are DB schemes. Then looking on the defined contributions, they make around 95%. So even when you look on the 1.7 trillion on the pension assets, the defined contribution schemes, they are making around 95%. Then we have over 6,000 trustees, and these are trustees who have already been certified, and both you have the trustees for the DB and DC schemes are part of those trustees. Then the service providers, administrators, we have 31, fund managers, we have 32, custodian, we have 14. You realize that the custodians are the banks which keep your money safe. So in this case, I think we have no more coming over the custodian, because also the custodians are the banks which are regulated by Central Bank of Kenya. And in that case, they're also limited in terms of the growth within the industry. So membership, I think we are seeing that mostly most of the members are within the informal sector, and you realize that around 83% are within the informal sector. So you realize that, yes, to reach out that informal sector is actually a big deal for us as an authority. So that's why we can ensure that most of you are being covered as your old age pension, you'll be covered at that point in time. So in this case, we are saying that currently pension coverage is around 26%, which is still a bit low. We are trying to, as a regulator, to try to move it higher. So as now more people are onboarded in terms of saving for their retirement, and they will not be subjected to maybe old age poverty, something like that. Then looking on the DB schemes, KenGen DB schemes, you know, it's a closed schemes, and the previous speakers have already alluded to that. Looking at the actual valuations, Linus have already spoken on that. Assets of 8.8, liabilities of 10.5, funding level of 84.2%, which give, I think it's a deficit of 1.6 billion. So it's not a surplus, it's a deficit of around 1.6 billion. So sorry for that. So I think on the positive part of it, funding position has improved. I think previously it was 76.9% in the year 2020. Currently is 84.2%. And this one is a good thing. Why? Because I think partly the sponsor has been complying with the remedial plan which they put forward for funding of the DB schemes. So that's partly why the funding position has improved to 84.2%, among other factors which contribute that. Nonetheless, I think there's still we still you have not yet reached the minimum required of 100%, and I think now the Board of Trustees to look on that, so as not to ensure that even though the recommendation the actuary has already given in terms of the topping up the funding position to 100% should actually be adhered to, and maybe give the authority the response in terms of how do they want to ensure the scheme is fully funded for the benefit of the members. Because as if the scheme is not funded, as a pensioner, you at some point you may not be able to maybe liquidity problems at some point. And that's why we always ensure that the scheme is fully funded 200% to ensure that at any given time, there's no way that member who exiting will not be able to get his or her money at the point he exits. And then just our key concern as authority is what I think even the actuary has already alluded to, that is overexposure in the property. And I think I've had this chair of the Board of Trustees speaking on that. I think there is need for us to regularize on the exposure in property, because at the end of the day, it may bring some sort of liquidity issues at the point you members exit, and there's need for the Board of Trustees to try to mitigate that compliance risk and be able to meet the minimum required within the law. The next slide is just looking on the DB schemes as overall, and more specifically on the public sector DB schemes. And when you look on the public sector DB schemes, I've said there are around that 5 schemes. And then looking on the funding position or the funding level, currently we have around 12 schemes, 12 public sector schemes which have really met the minimum required of 100%. So if we are say among the 5 schemes, then all those schemes that are winding up at this point in time, only 12 schemes will be able to meet the requirement or meet the payment obligation of the members at that point in time. So we are saying you can also be able to put your scheme where are you in, so you can realize that you're at 81 to 90% of the funding level currently, and which you need this need for the Board of Trustees to look on that and be able to ensure that you're within the 12 schemes which are fully funded. Then for the DC scheme, I think we have not much on the DC scheme. I think it's a scheme which the funding or the growth of the funding level is growing. It's currently at 11.03 billion, which is a good growth. And I think there's more prospect of growing that scheme because of the new membership which are coming on daily basis. You look on the contributions which you get on quarterly basis is up to date. There's no arrears. And one of the key problems we have with the DC arrangement is mostly on the outstanding. So to some extent, you are being deducted money, but that money does not go to the scheme. And why, at the end of the day, you as a member, you'll be able to compromise because that money may not have grown at the point others have already been remitted to the scheme. So in this case, we are saying that your scheme is growing well because also the adherence of the contributions which are remitted on time, and that's a plus for the Board of Trustees. Then in terms of the good governance disclosures, that's something that the regulations are saying they must be disclosed within the audited reports. I've seen the audited reports, they have some disclosure in terms of good governance. And that one is just to see what the Board of Trustees have done within the year in terms of their board meeting, in terms of member education, in terms of AGM. Have they ensured that the members have already been educated on some of the areas, and I've even heard from the trust secretary they are speaking on that. So lastly, on just some of the changes within the industry, you've had the trustee remuneration policy and scheme expenses, which are gazetted in May 2023. And this one I just set the minimum standard in terms of how the trustees remunerate themselves or the allowances which are provided to the Board of Trustees, and also the ensure prudent management of the scheme expenses. So to some extent, you realize that some of the schemes they misuse in terms of how the expense within the scheme. So in this case, we are saying that if we harmonize how those expenses are being done within the scheme, and even we harmonize the way the trustees are being remunerated, then at the end of the day, we may be able to ensure that the schemes have some sort of uniformity in terms of what they being remunerated to the Board of Trustees and what the expenses are provided. So a more detailed policy is, I think, within the Board of Trustees, and they should be able to understand what the policy says. Then other is corporate trustee regulations, which are gazetted in July 2023. And this one, some of the schemes, they have corporate trustees. So instead of the individual trustees like your schemes are, they have a corporate entity. And most of those corporate entities, they were not initially gazetted, they were not initially within our purview as an authority. So it is now within our purview whereby they need to be registered or they need to be licensed with the authority. And so once they're registered now, we can be able to oversee what they undertake as a corporate trustee. Then income donor regulations, they also gazetted in November 2023. This one is just to oversee how the income donor funds are doing. So initially they were not licensed within the authority, but now the regulations provide for the licensing within the authority as a standalone income drawdowns. Then lastly, on the last side of it is the amendment done to the fund managers regulations, and you're saying that it introduced amortized cost in addition to fair value approach in the market approach. So in this case, I think the actuary and the fund manager have already spoken on that, which they need to comply with that amendment. And then lastly, on the practice note, this one is more specific for the DB schemes. And the main objective of the practice note for the DB scheme is to try to harmonize how the benefits are determined within the DB schemes. So how the board of trustees, in guidance with the professionals, how do they process the DB benefits, should be now in compliance with the practice note. They'll be able to harmonize it within all the DB schemes. So now we can see some form of uniformity in terms of how they determine their benefits. So in this case, I think we have seen initially some of the misinformation or miscommunication of the members, and we ensure by this practice now our main objective to ensure that you as a members, you're given the right information, and that is that the information you're given, it feeds to what you're given as your final benefits. And then ensuring the protection of the members' benefits through what you call as maybe reasonable member expectation. They should be able to meet that. And that's the practice note what speaks about. And just pointing out on some of the areas within the practice note, maybe more specifically on the calculation and determination of the defined benefits. We are saying that all benefits which are calculated within the DB schemes should be provided by the TDR or the trust deed rules of the schemes. So these are the professional providing how your benefits are being determined. And even the actuary, the way it determines or the way it does its own actual evaluations should be guided by what that TDR says. And that's why you're seeing the split in terms of the service up to 99 and then prior 99. You can see there's a different application of the service. And that's actually what the TDR says, or what the provision of the scheme says, how your benefits should be determined. And then we are saying that any calculations being done within the DB schemes, the board of trustees are responsible for that calculation. So in terms of what you are being disseminated as your calculations, what you are given at the point you exit is actually the responsibility of the board of trustees to ensure that what you are given as a member is the right information, the right calculations, and the right benefits which are provided by the provision of the schemes. And then again, what the practice note is speaking about is the actual violation report should actually include commutation or withdrawal factors, early and late retirement factors within that interpolation period. So we are saying that I think one of the complaints we have been receiving over time, or one of the litigation we have seen over time, is in terms of what are the commutation factors? What are the withdrawal factors, the early and late retirement factors? I think it might be new to you, but the actuary knows what we are saying when it comes to commutation factors. This is what is being converted from your pension to a lump sum. And that's actually what the actuary was speaking about. So we are saying initially there were not disclosures in terms of how the member will be able to see the commutation factors which are applicable. And that's why we are saying that every actual violation, because it's a document which can be provided to the member, should actually have such kind of disclosures. So that's now any member who is interested in terms of knowing the commutation factors which applied at that point, they can be able to see it within the actual violation report. So going forward, I think going forward from any actual violation that will be done prior to 2023 or going forward from 2024 going forward, it will be done. It should be in compliance with the practice note, and those disclosures should be met as per the practice note. Then the trustee should consider in terms of determining the actual violation, the actual advice, in terms of determining the commutation and withdrawal factors, the actuary should be able to guide you on that. Early and late retirement factors, cost of discussion pension increases, which actually has been provided consistent within the actual violation report, and also the annual benefit statement. So we are saying that even going forward, the annual benefit statement should be guided by the actuary. So in this case, we are saying that any information within the benefit statement should be able to speak what the actual violation is saying. Because actually initially what we are seeing is that in most of the benefit statements which have been initially prepared, they were not prepared based on the advice of the actuary. And that's why we see some inconsistency in what is within the benefit statement and what is the final benefit you're given when you exit. So to try to harmonize that, so there's not that variances with what has been provided periodically as a benefit statement for the member and what will be the final benefit, then the benefit statement should actually be provided by the actuary. And I think what I've heard from learners is they provide advice in terms of benefit calculation and in terms of benefit statement. So even going forward, as what the practitioners are saying, that even where we have already automated the benefit calculation within the system, then the actuary should be able to audit that automation, which provide you a final calculation, should actually be in compliance or should be in conformity with what the profit of the scheme rules are saying. So even I think maybe going forward, at some point, we may be able to audit, even as an authority, will be able to audit their system, because most of the calculations have been audited, have been automated. So even that automation should be able in compliance with the practice note and in compliance with what the TDR is saying and other regulations. So that's all from me. Thanks so much. I think in case there's any question, I think we'll be able to speak at the point of Q&A. Thanks so much.
Thank you, David. Now, since this AGM is for the members, it's now your chance to raise those questions. Even questions that you may question can go to the service providers, the regulator, the trustees. And the way of doing this, I'll ask Bernard Minor to activate his mic, and we shall do the first set of questions and get responses. Then we'll go to the next set. Then we'll deal with the ones online. Then we'll go to the final stretch of finishing the meeting.
Kwa majina yangu naitwa David Sokobe. Swali langu naenda kwa manager RBS. Swali la kwanza, the three of which I require some clarification. Kwa RBS, kuna hii system wanatumia ya kucalculate hiyo final dues mtu. Meaning, kuna ile personal contribution plus employer contribution plus interest hand in give an account of a member. So my question is, if you can advise, how does personal voluntary contribution affect the whole system? Then number two, to purchase on annuity. And then the choices involved, and then the period taken to clear your annuity and the response on it. Number three, ni the management. Tumeona, okay, one time nilikuwa nyumbani, nikaona one of our retirees ako na official form. Lazima aende kwa chief, local chief, aende kusainiwa ndiye apate malipo ya hiyo mwezi. I want to know if there's any step that could be taken to rectify that one, because hata wazee wanashindwa kutembea these days. Pengine mtu wako na underlying condition ambapo inaweza kumzuia kufika kwa chief, asainiwe hiyo document and then apeleke kulipwa. That's my three questions. Thank you.
My question is, when we are in employment,
please introduce yourself, please.
Sorry, my name is Amos Olonde. My question is, when we are in employment, we have a robust, active medical scheme. What is our schemes retirement schemes, medical arrangement for the retirees, because I've not heard it being mentioned, because as somebody retires, the deceased catches up with us, and what have we put in place for the retirees on medical?
Thank you, Amos.
My name is Sila Tega. My question is that most members are in retirees, and some of them always take loans when they are terminated. I don't know how you capture the information so that you can help the guarantors also to cure the deficit of that member. Is there a provision that in case that member has defaulted, can his or her benefit be taken to cure that or to cushion? Because this is affecting members here. I'm also a victim of it. So if you assist, I think we can have information on it. Thank you.
Thank you, Chair, and your board. One, Joseph Wambua, a retiree. I want to appreciate what you have been doing to us as retirees. We are enjoying our retirement and the good service that you have given us, even medically. But my question is, especially on what has been highlighted by the gentleman who was giving the RBA regulations and touching on KPLC and the KenGen, the formulas used in both. You realize that when we were serving in KPLC, we served for most of us a shorter period before we moved to KenGen. And then in KenGen, the benefits are lower, actually much, much lower compared to KPLC from what we get in our salaries. And we realize that is actually from the computation formula where one is using 3.3%, the other one 2%. Well, our question is, what informed that we are getting lower pensions from KenGen than what we should get from, than what we are getting from KPLC, our old employer? Number 2, in KenGen, we have no increments in terms of pension, whereas in KPLC, we are having an increment every year. And we feel like both the schemes should have at least some similarities. Why should one be giving benefits to the retirees and the other one denies them? You know, because it's kind of a denial. And we feel like actually most of the retirees are asking that question. Why can't KenGen consider that after retirement, there is inflation also that affect the people who are outside, while in employment, they used to get an increment. Why is it denied in retirement? Thank you.
Thank you, Joseph.
My name is Jackson Sencho, and my question is very brief. It's just to ask, how does a member have, because I can see the trustees invest on behalf of the members, but how does a member have a say in that investment?
Just have a comment. After running the poll on member education, but if you see at the administrative cost, we also see a reduction in it, and yet you are emphasizing on member education. What contributed to the lower cost in member engagement? And I just want to highlight an error in page 62 where there is just a sign, and this is, you see, it's a document, and where the secretary and the chair interchange the signage. Thank you.
I will just direct questions to where they get the most effective response. I think I'll let the CEOs respond to David.
Thank you, Chair. I'll go through a number of questions that have been asked by our members. First, the question from David, the issue of AVC. This question is majorly a DC question. We don't have AVC in DB. However, members contribute 10% of their basic salary under DC and 20% under the employer contribution. This together with the interest forms members' kitty. However, the AVC forms part of the employee contribution, and the laws allows a member to go to access AVC as a lump sum at withdrawal. However, at the same time, this can also help the member to increase their monthly payment in retirement. So this AVC earns interest as any other money in the fund. So it's part of your kitty, it continue earning accruing interest, and that forms part of your retirement kitty in retirement. The choice between annuity, when a member retires, we give them a number of options, more than 5 options of reputable organizations that gives annuities. Most of the annuities come from insurance companies, so we give approximately 5 quotations from insurance companies that we are sure of the fundamentals lying in these organizations. And additional to this, we earned the income drawdown fund, which is an alternative to the annuity. So currently we have an income drawdown fund, which you don't have to now to go to the insurance companies. You can continue earning your monthly income within the fund from the IDD. The form of confirmation, the one that you met literally going to see the chief. Within the trust deed and rules, it's a requirement to confirm existence annually. The chief just help us to confirm or witness your document. It can be witnessed by the bank, it can be witnessed by a pastor. However, we are coming up with ways of automating the same to make them easier. But as we age, some of the options available, like biometrics, are also not working as expected. As you age, your fingers have a problem. Voice is also an issue. Facial is also an issue. So we are trying to come up with an easier way, ensuring that as we automate, we don't make it also difficult for pensioners to confirm the existence. But that is something that has been noted by members. For medical, from Amos, we provide more than 4 medical schemes for pensioners retiring. And for these 4, it's voluntary, it's not compulsory. However, we encourage members retiring immediately after retirement to ensure that they continue with the NHIF contribution, that is the 500. And the other options are from 4 insurance companies, that is First Assurance, Jubilee, UAP, Old Mutual, and previously we used to have enhanced NHIF, which is expiring in the next few months. And we hope that the medical schemes we have for pensioners have worked well. We are trying to negotiate better covers, and we hope to be able to take care of members to ensure that as they retire, they have even a better medical cover than what they used to have in employment. Members taking loans and running away with your money as a guarantors. Unfortunately, the regulation does not allow members to assign the retirement benefits for a loan. I cannot help, but just encouraging you to check on members' ID. If they are about to retire, don't sign the loan. That would be their advice. Otherwise, they will come to my office. I will not help. I will still pay their benefit. The regulator is here, would be looking forward to me saying that I will do that, and it will be illegal. The next question is the issue of the provision of the trustee Wambua. The question on Kenya Power and KenGen Service. The actuarial factor for Kenya Power Service is not Kenya Power Service, that is before 1989 is 3%. KenGen Service is 2%. One of the things that members most likely have not been able to check closely, it's the salaries under KenGen were higher than salaries under Kenya Power. It is true. those salaries form part of the computation that, or the calculation that is used to give you the monthly income. These are factors that were clearly spelled out when members were moving from Kenya Power to KenGen. These services of increase of pension under Kenya Power, because this was an accrued benefits on you. So the increase of 3% under Kenya Power service had already accrued on you. But the services under KenGen, it was the increase now. Leave the actual fact of 3 and 2, the increase of monthly income to pensioners is determined by the performance of the fund. For KenGen service, we have been increasing depending on the performance of the fund. Last time we did it is 2018. I know the chair has a message on that one. I will leave that to the chair. On the issue of the administrative cost for the declining for the members, especially on the administrative expenses, one thing, we have automated most of our services, ensuring that we can engage members, not a must for it to be physically, but can also be virtually. So that is one of the things that has helped us to reduce the engagement cost and also taking advantage of the sponsor services. So it's not always that we can have to incur a cost for us to engage you. So the cost has reduced, but if you look at the numbers of the engagement forums have increased. Chair, I will leave you the question on the pension increase at the KenGen and what maybe we are doing at this moment. Then we can take the question on the chat module.
Let me trust in Ernest.
Yeah, thank you, Chair. Let me maybe weigh in a bit on Wambua. I think Wambua raised a very pertinent issue about the comparison between KPLC and KenGen, which the TS has heavily done. But let me also add some more, or rather to put it in perspective. The pre-1999 service, I think that has clearly been presented by our administrator. It is 3%. Post 1999, from January, it is 2%. That is a percent, the factor that you use, you will apply when calculating the pension, the computation. The same applies also to Kenya Power, because I am a trustee at Kenya Power and I'm also chairing the DC scheme. But maybe to give you comfort, there is what is called income replacement ratio. With the benefit of being in the two schemes, we are doing very well as KenGen. And I'm now saying as we, because I'm also an employee of KenGen, I am permanent and pensionable employee of KenGen, though I'm not active in the payroll. Please, I think that I must state that. You may think I'm in the KenGen payroll. I'm in Ketao payroll. Now, in terms, Chair, also, in terms of contribution, Kenya Power contributes 10%. Employees contribute 5%. For KenGen, the employer contributes a whopping 20%, and that has a direct effect on your take home when you retire. So I think that should give you comfort, Wambua and others. Thank you, Chair.
Thank you, Ernest. Now, the question that's not been answered is on the increment. I think after reviewing our performance in the past year and also considering what is possible, the trustees have approved and have asked the sponsor to fund a 3% increase, which will be about payable, I think, from July. So there is some adjustment that has happened, Mr. Wambua. So do not feel as if we have no feelings. Your interests are addressed in that regard. Now, I think going forward, I would suggest that we look at some questions. We have covered all the questions, I believe. One was a remark about something in the document, page 62. We'll come back to that. But right now, I think we should go to the questions which have been sent online. Just what we're getting them on the screen, or?
I'll share them because there are so many. I'll pick some.
Okay.
And the team has been answering them. So I'll pick them as they are.
Okay, pick a sample.
A sample, Chair.
And the rest can be fed back from communication.
Some anonymous member asking during the LBS member representative election done in April 2024, there were so many allegations, mostly by Team Lomba. Can they confirm if they were true or false? Chair, this is a major issue on the election we had for the DC scheme. It's good to answer it here. We operate in a very regulated environment. Our financial statements are also audited and the auditor is present. We also operate within the regulations and the regulator is also present. And we have fund managers and custodians. Our scheme information is public information, which is also available within the scheme website. I was not a member of any of the WhatsApp groups, so I might not know the allegation, but I would wish to confirm that the fundamentals and the policies within the fund are very firm, and we do the level best to ensure that the scheme is well taken care of. The reason why the scheme has won Corporate Governance Award, Fire Award, just to confirm that it's not only the issue of audit, but it's also the issue of the systems that we have put in place. Just picking a number of other questions, Chair. There was a question by Christine Naliaka asking if a member dies, how long does it take for them to be paid, the beneficiary to be paid? This depends on one thing. Has the member nominated their beneficiaries? And if they have nominated their beneficiaries, how fast are the beneficiaries ready to bring their documents? And how are they first able also to make a decision as beneficiaries? So most of the time, the delay is usually occurs from the beneficiaries, and majorly for our gender, the other gender, male gender, where people have more than one or two wives. So there's always an issue of one or two, but we have been able to ensure that members are taken care of. That one majorly depends on the documentation. The other question that was asked, and I think it's good for me to answer, the question was also asked about the scheme lost some money, that is 140 million. This is back in 2015, 2016, and this was funds that was lent, was supposed to be collected by one of the agents for LBS Garden. We have followed this case up to the Court of Appeal. From arbitration to the High Court to the Court of Appeal, the award has been positive for the scheme. And this moment, the scheme is at the point of actualization of the award. So the scheme is very hopeful that the positive outcome of that deliberation. The next question, Chair, which I thought is also good to look at, is the question from CPA Pandon and asking if the 5.9% in the DB fund is for all assets. The 5.9 is for all assets, and that's what we credited to members under DB fund. I think there's a question that we need to allow Dan Gadhogo. You can listen to this question. This is the asking, Dan Kaidri, as per your presentation, you indicated that we are expecting a double digit currently. With the current political environment, are you sure that we are able to keep to that? And additionally, how is the fund managers ready to ensure that the double digit is kept in the future? Thank you, Chair.
Bernard, give Dan the mic.
Thank you for that question. So if you look at the way the scheme is invested, the asset that is very volatile to, in case, the markets don't do well is equities, and the scheme only has a 5% allocation towards equities. Yes, it's an allocation, but just to point out, it's not, really significant. Much of the scheme investments are in bonds, close to 40% in property. And here we can confidently say that we expect that, returns will still continue to be strong from bonds. There's a bit of consistency there. The only asset class, just to reiterate, that can be volatile is equities, but the scheme, the exposure to equities is 5%. So with that, we still remain confident that the scheme's return will be double digit for this year, 2024.
Thank you, Dan. Jackson, was your question answered? Well, I think during the year, you elected a trustee who represents, are you retired or you're still on this? Or in that case, you also elected. Go on.
Chair, I remember the question on the IPS.
No presentation. I mean, are the members represented investment decisions?
Yes, they are, and that's where I'm headed. So the scheme first is guided by investment policy statement. And that investment policy statement has the input of the trustees, the fund managers, the custodian, and the actuary, and we are well guided by the prudential guidelines from the regulator. The members did the election and elected two under management, and we have also two from the union. So that is a 50% representation at the board. So the investment decision made at the board will reflect on what members are expected. Thank you.
Thank you, Josephat. Jackson, I hope that's good enough. Thank you. Now, at this point, I think I'll cut off the questions because we have a follow-through meeting after this. So I'll ask that I beg that the chairman's annual general meeting report, proposals and recommendations and presentations made by various stakeholders be adopted and form part of this meeting. And at this point, I'll ask somebody to propose for us to adopt.
Proposer, please.
Mr. Wambua is here. Thank you. I thought you were being we are being told to speak.
Good afternoon.
Good afternoon.
My name is Peter Uma, and I propose that these deliberations be adopted. Thank you.
Thank you, Peter. Wambua, give Wambua a second.
Thank you, Chair. I also give my word that we adopt the discussions of the day, the deliberations, and we are in agreement. Thank you.
Thank you, Mr. Wambua. That's a secondment. Thank you all. Now, ladies and gentlemen, as we come to the end of this AGM, I take this opportunity to convey my deep appreciation to you and our members, pensioners, for always honoring our invitation to the AGM. We wouldn't have it without you. To our service providers for your constant support to ensure that our members receive only the best in their retirement. Thank you. The ever-dedicated secretarial staff, Josephat, and your team, and the team here at the geothermal for the wonderful hospitality. And thank you, trustees, for the work you've done over the year. And now I'll ask that Josephat, you do our third roll.
Chair, we'll do the last poll for the DB scheme, and I'll ask the IT team to project. Thank you. The poll 3 scheme carried out. Poll 3, please. Thank you. Having adequate saving enables you to live more fulfilled life, which is your immediate financial savior. Having adequate saving enables you to live a more fulfilled life, which is your immediate financial savior. This is a one answer question, either Stima Circle deposits and shares, bank deposits, government securities, pension contributions, or corporate papers or corporate equities, money market, and the last one, I don't save. The answers are Stima Circle deposits, bank deposits, government securities, pension contribution, corporate equities, money market funds, or I don't save. Tim, you can project the results. Thank you, Chair. Members, as indicated here, the most immediate savior for them is Stima Circle deposits and shares, followed with a small on bank deposits and good membership at 5% on government security, pension contribution at 18%, corporate equities 1%, market money market funds 14%. And there's some members who don't save, 2 members. I hope it's just for fun, but I hope it's not the collections. So we have 1% of our membership who live within whatever they have. Thanks, Chair.
Thank you, Josephat. Now, ladies and gentlemen, there being no other business of which due notice has been given, may I take this opportunity to thank you once again for attending the meeting. In future, if you want to bring up an agenda item, you have to give notice so that it's addressed before the meeting and people prepare to respond. Members and our guests, we have now come to the end of, if I may say, a fruitful DB scheme AGM. I therefore declare the meeting officially closed. We shall now take a short interlude. You want 10 minutes? Yes, 10 minutes before the shifting gears to the DC's AGM, which will be officiated by Ernest, Chairman of the DC scheme. We hence request members joining us virtually to remain logged in and enjoy our interesting documentaries during the break, demonstrating our zeal towards a comfortable retirement for our members and their beneficiaries. For the senior citizens who have joined us virtually, but did not join the internal incoming drawdown fund and other members of the DB scheme only, you may opt to join the DC scheme AGM webinar, or you may leave at your own pleasure. For those who are here physically, you may opt to stay or take a break as the DC scheme and AGM is going on. As we proceed to the break, let me take this moment to wish DC scheme chairman, Ernest Ndome, a happy birthday. Shall we sing for him?
Yes.
Bernard, I think your co-MC might have a better tune.
Exactly.
Start us off.
Happy birthday to you. Happy birthday to you. Happy birthday, dear Ernest. Happy birthday to you. How old are you now?
Thank you very much. Many happy returns, Ernest. We celebrate you and your contribution to both the DB and DC scheme and wish you your fulfilled continued success and good health. We look forward to many more years of shared achievement and prosperity for all of us in the scheme. May God bless you all, and thank you for being here and listening to us.